Thank you for joining us. This is Business Incorporated coming to you live from our Lagos studios. I'm Chimeze Obi Iwagu. On the show today, Bank of Ghana closes 5 banks and creates Consolidated Bank. Societe Generale prepares to exit South Africa and in talks with ABSA. Plus, London court rules DP World Djibouti contract valid and binding. We get the show started now with the markets, and South Africa's JSE index was heavily hit at intraday as the index came down 1.66%. The negative sentiment was also recorded here in Nigeria. The NSE index was down 0.27%. Egypt, however, moved northwards to 0.89%. Kenya closed down 0.31% on Wednesday. And in the Middle East, sentiments were majorly bearish as most of the major markets traded in the negative at intraday. Only the Qatari market was looking green. Others, Abu Dhabi, Dubai and Saudi, were down, with Abu Dhabi leading losses by 0.70%. And in the U.S., stock index futures fell sharply as trade worries intensified once again. Dow Jones Industrial Average futures dropped 183 points, indicating a decline of 200.82 points at the open. S&P 500 and Nasdaq 100 futures also posted sharp losses ahead of the open. Earnings season continues to keep investors busy on Thursday with a whole slew of companies due to report. Dow DuPont and Artner are among the companies that posted quarterly earnings. Both of their results topped analyst expectations. Our jobless claims are due at 8:30 a.m. Eastern Time, followed by factory orders at 10 a.m. Eastern Time. The reports come after the Federal Open Market Committee kept interest rates unchanged, but indicates that it was upgrading its outlook on the U.S. economy to strong. And in Asia, markets fell today following an overnight mixed session in the U.S. and renewed trade concerns offset strong gains in tech. In Australia, the benchmark ASX 200 declined 34.8 points to 6,240.9 as the material sub-index fell 2.17%. Japan's Nikkei 225 fell 234.17 points to 22,512.53, while the Topix index declined by 17.67 points. In South Korea, the Kospi was down 36.87 points at 2,270.2. Hong Kong's Hang Seng index declined 2.27% in afternoon trade. Chinese mainland markets were also lower. The Shanghai Composite declined 57.3 points to 2,767.23, and the Shenzhen Composite fell 37.23 points to 1,512.04. Well, let's get back here to look at the Sub-Saharan Economic Outlook. Economic analysts at EcoBank Group see resilient outlook amidst increased headwinds for Sub-Saharan African economies. In its first half 2018 review and second half economic outlook report, the group noted that Sub-Saharan African growth is expected to accelerate to 3.4% in 2018, up from 2.8% in 2017, reflecting strengthening recovery in a number of countries. Well, let's talk to the head of economic research at EcoBank London, Gaimin Nonyane. Hello, Gaimin. Good morning. Good afternoon. Thank you for joining us.
Good afternoon.
Right. In your Sub-Saharan African economic outlook, you see growth accelerating this year to 3.8%. What are the major growth drivers?
Well, first of all, let's get things into perspective. The Sub-Saharan African region is going through a recovery at the moment. So even though the growth is at 3.4%, it's well below trend. I mean, this is well below the 5 to 7% growth rates we saw in recent years before the 2014-15 crisis. And what's driving this is because we've got the regional giants, the heavyweights, such as Nigeria and South Africa, are now going through a recovery with real GDP moving into the positive territory. And so as they continue to grow and the recovery is consolidated, then it helps to bring up the overall average of the region. But also we're likely to see strong growth rates in other West African countries, in particular Francophone West Africa, Cote d'Ivoire and Senegal.
Now, how much impact do you see the global trade tension, having on sub-Saharan African economies?
Oh, I think it's had a significant effect, particularly in liquid markets such as South Africa, Nigeria, Kenya, Ghana. We've seen capital flowing out, an increase in capital flowing out of these markets because of an increase in risk aversion towards frontier markets. And in addition to that, we've also seen a decline in global USD liquidity on the back of the Federal Reserve, the U.S. Federal Reserve Bank's policy normalization and the reduction of its balance sheets, its 4.5 trillion balance sheet. So the uncertainty over the trade disputes between the U.S. and China has created a number of uncertainty in the market, and so investors become very risk averse, and so we're seeing capital flowing out of the region into developed markets. And one indication of that is that we saw in May, when things were really intensified, the CBN of Nigeria immediately entered the markets, the foreign exchange markets, and it mopped up about 1.3 trillion worth of OMOs, as well as became a net seller of foreign exchange to help to reduce pressure on the Naira.
Now, talking about Nigeria, what is your outlook in particular as we head into the election year?
Well, with regards to the economic outlook, we think that it's going to be a very volatile second half of the year for Nigeria. On the political front, we're already seeing some politicking taking place between the ruling party and the opposition. And then this is having some impact on investor sentiment as well. And then we're also likely to see an increase in spending by the government. We've already seen in the Q3 borrowing requirements that the government plans to borrow more than they did in Q2. They're also likely to roll over their maturities, all maturities in Q3, which suggests more spending from the government. And that is likely to have inflationary effects. It increases upside risk to inflation. So we're likely to see higher inflation, higher domestic imbalances. And in addition to increased political risk, we could see some softening of the Naira towards the end of the year. But having said that, we think that we're not expecting anything significant because the CBN has enough buffer, foreign exchange buffer, to help to support the Naira.
The interest rate environment.
With regards to interest rates, we believe that there's been a lot of uncertainty given the increased risk sentiments towards emerging markets. So as a result of that, we think that the CBN has become less dovish with regards to an interest rate cut. And so the strong likelihood is that they'll continue to maintain the policy rate at current levels till the end of the year.
Now, generally speaking, which countries will lead growth this year and why?
Well, first of all, I've just mentioned the regional heavyweights, Nigeria and South Africa. They're not, because of their weight in the entire basket of countries in the region. Any increase in their growth rate will have a positive impact on the entire average for the region. But in particular, we have Ethiopia, which is going to be the fastest growing economy of above 8% in terms of growth rates this year. We also have Senegal. We also have Cote d'Ivoire, which will be growing above 6%, helping to create opportunities for risk assets in those markets. And then we've got Ghana. It's likely to slow down from previous years where it was growing at 8%, but we believe that growth will still remain strong above 6% this year.